Well, welcome back. This is one of those questions that's a hot potato. The answer depends upon who you are and what you're doing with your money. So, stock market investors are going to tell you one answer, and the real estate people are going to tell you another answer. It depends upon what you're experiencing in the market right then and there. But long term, both of these investments are okay, but one of them is a hot potato at one time or another. My name is Ted Thomas. I've been involved in an alternative investment which is in the real estate category, and it's called tax liens and tax deeds. It's just a subset of that business. Okay, now these properties are defaulted real estate. So when we buy defaulted real estate, we're going to try to get it for absolutely pennies on the dollar. Today, what we're doing is we're comparing real estate with the stock market. So tax liens and tax deeds are unwanted properties. That means the people haven't paid the tax. They don't want the property, and when the county gets it back after they confiscated it, they don't want it either. So the property owners that defaulted may not have taken good care of the property, so they might be slightly used and abused. Now, some of them are just junk, so you don't want to buy junk. Forget about that. Now, many are residential buildable lots, which are fine because there isn't anything that can go wrong with those. But there's many that are nice mom and pop properties that you can turn around relatively quickly. The point is, the particular alternative market that I'm involved in, there's plenty for everybody, and there's a little bit of everything within that market. Now, there's very few properties in the country club, and most are working class neighborhoods. So if you understand you're going to get bread and butter properties, and you can make money on them, and that works for you, then you're going to like this part of the real estate market. My point is, there's plenty to choose from. Now, in today's episode, I'm answering the question, is real estate a better investment than the stock market? I'll be right back with the answer. Everyone has an opinion, and most people are pretty generous, and they will take your time, and many of those people don't know what they're talking about, and they're going to talk and talk and talk. Now, overall, my response is listen to those people, but understand if they don't have a high net worth or they're not successful at something and they haven't earned money and made money themselves, they're probably not the best place to take your investment advice. They're going to give you a lot of advice. What's their experience? How do they know about it? And why are they successful? So not all of the opinions you get are really equal. So you want to give that a lot of thought. So if the viewer is looking for people with experience, that's important. If they don't have experience, I would not take their advice. Certainly listen and not argue about it. So in today's episode, I'm going to try to give you some insight and some discussion on, is real estate a better investment than the stock market? So let's kind of do some comparison. So is it apples and oranges? Yes, when they're both good for you if you know what you're doing and you've taken the time to educate yourself. For example, most real estate is hands-on investment. In other words, someone that prefers to do it themselves. Now, there's other investors that like stocks, and they want someone else to chart the course. They want someone else to manage it. They want the management team to lay out exactly what's going to happen and figure out the future. In other words, they're not cultivating a learning process. All they are interested in cultivating is the stock going up or am I going to get paid dividends? They just want to be a cash investor. Now, for most real estate entrepreneurs, they're looking at single-family homes, or maybe they're looking at small agricultural properties, even small apartments. You're getting the idea, residential lots. Those are all hands-on, onesie-twosie kind of investment. Agricultural property is going to require that you actually work at it, but you're getting the idea. It's going to be hands-on. You're not just going to analyze it and then hope it's all going to work out. So all these types of real estate that I'm talking about are hands-on. They haven't been involved in speed trading or day trading or any of that. No one's figured out how to standardize all those individual kinds of properties. So this is going to stay that kind of business at least for the next few years in the foreseeable future. Whereas stocks are pretty standard. So you have to figure out the management team. You have to figure out what the executives are doing. You have to figure out what the market for the product is. And most of all, why is it going to go up? Why is the stock going up? Or are you investing for dividends, or are you investing for growth in the market? You have to think about those things. So these are two different kinds of investment. One's very analytical, one's somewhat analytical, but mostly hands-on. Okay, now there's a massive market for fixer-uppers. I mean, there's hundreds of those where people want to buy it and they want to fix it up and then they want to make their money back. There's also another abundant market with tax liens and tax deeds. The tax deeds are defaulted property that's unwanted by the owner and it's unwanted by the county. So they want to get rid of those. So these properties are sold at very low prices at tax defaulted auctions. Now there's millions of foreclosures across the United States annually, absolutely millions of those. And these are properties that people have defaulted on a mortgage loan. Now the problem with that is that many of those mortgages are 80 and 90% mortgages. That's not going to leave you any room to make any money. But most of those are single one-on-one transactions. Can you make money at any of those? You can make money at all of those if you know exactly what you're doing. All right, now individual properties are sold by HUD, that's Housing and Urban Development. The Veterans Administration, they have properties that they're selling. The Farm Bureau has property. My point is, there's plenty of properties. So real estate in itself, there's plenty of real estate to do business. There's actually plenty of stocks, probably 7,000 or 9,000 on the stock exchange, but only a precious few of those are going to meet your criteria. All right, so hands-on combined with massive market opens up something for everyone. So where do you want to be in that market? Well, it's going to be totally up to you. So if you want to create value and higher prices, that's the perfect way to be in the business. So people that do flippers and wholesalers, well, that market is big and it will stay that way, although the margins are really, really tight. So the opportunities are all hands-on. A few entrepreneurs are going to develop a group, and their group is going to go out and fix up multiple properties. Nothing wrong with that, but keep in mind, the pricing is what's so important. All right, so most investors that are real estate investors, they want 100% control their destiny. They want to know what they're buying. They want to know what they're selling. They want to know everything about it. So in this episode, I'm trying to answer, is real estate a better investment than the stock market? Well, I don't know how you're going to get the exact answer to that, because sometimes the stock market can make so much money, it would take you 100 years to do that in real estate. Other times, the stock market continues down, and it might go down for 2 or 3 years. So investing in the stock market is an altogether different group than those people that are buying distressed property or buying real estate to fix it up or buying real estate to do flippers. So analyzing the deal on a stock is much different than analyzing a deal in real estate. So stock market investors, they've got to have faith. They've got to have faith that the market is going to continue up or the market's going to continue to produce dividends. They need to have faith in the market, all right? Now, they also have to have faith in the management team that's going to manage that company and in the executive team. Where are they going? Are they charting the right course for the company? So you need to have thought about those things. So stock market investors have no intimate relationship with the broker or the company. They're either there for cash flow, growth, or dividends. They're not there for a lot of other things. They want to make money, and that's the end of it. So a broker is simply selling a stock. It means you better have a lot of faith in what you're doing in the stock market. All right, now real estate is a gamble on the condition of the property. Some properties are really in bad condition, so they have to be looked at. So I always say, make sure you've got boots on the ground and you've checked out those properties, no matter which environment you're buying. Now, I'm going to buy in the alternative real estate market, and that subsection of real estate that covers tax liens and tax deeds. Now, tax liens and tax deeds, what are they? They're properties that nobody else wants, including the owner. The owner has not paid the tax. That means the county will do something about it. So the legislature authorizes the county board of supervisors, county commissioners, to seize any property that the taxes aren't paid. So the commissioners don't do that. They actually assign the treasurer and the tax collector to levy the tax, try to collect the tax, and if they can't collect it, they seize the property, and then they sell it at auction. And they sell it for pennies on the dollar. I mean pennies on the dollar. It was an unwanted property. The county doesn't want it. They have all the property you want. What do they have? They have all the parks. They have all the schools. They have all the administration. They don't want this property. What does the county want? They want money. All right, the money they want to get that property back on the tax roll. So they want honorable taxpayer paying tax. So they discount it 60, 70, 80% and sell it without a mortgage. That means you're going to buy for the opposite of that. 10, 20, 30 cents on the dollar with no mortgage. Well, if you get a property for 20 cents on the dollar, how many would you buy? You'd buy as many as you want. That's right, because there's going to be an abundance there. There's going to be an abundance of profit between the purchase price and the selling price. Okay. Now stocks are easy, especially to buy. Anybody can buy. You can push a button, you're buying. Same thing with selling on the stock market. Push a button on the laptop and you're selling it. All right. Real estate is not that way. It's not going to work that way. And when you buy it, you're going to own it, and you could have maintenance headaches. You could have eviction headaches. What are you doing? What's your choice? Do you want to have all those headaches, or do you want to have it easy and have the management team and the executives manage your money and chart the course for the future? It's going to be up to you. The hands-on investors are all people that can figure it out. They can figure out what they're going to do with it. If you're a stock market investor and you came in when Tesla was just come out, or when Apple just came out, or when Facebook did, and you can see the future, well, you're probably going to be a multimillionaire quickly. But most stocks aren't quite as precious as those market leaders. Do you understand what intuition is? Well, you might be a great stock market investor. I don't know. But I can tell you, real estate has many ugly parts. It's not pretty, especially if it isn't taken care of. So when we buy properties at tax defaulted auctions, what are they? They're used and abused. We're going to try and get those properties for pennies on the dollar. That's exactly what we're going to do. All right, when we get them for pennies on the dollar, then we're going to sell them under the competitive market. We're going to sell less than the tax value, less than the competitive market, so we can get rid of them quickly. Now, if you want to accelerate getting rid of the property, we offer financing. So real estate may be a better investment than stocks because we can get huge discounts and we can sell them using all different kinds of financing, so we can make money on the sale and we can make money on the financing. How about that? So buying property and waiting to increase rent is going to take one heck of a long time. All right, so the market for stocks is topsy-turvy, up and down. Not to think for a second that real estate doesn't go in cycles too. It goes up and it goes down. It goes up and it goes down. All right, with stocks, you can make a fortune overnight. You also could have a nightmare overnight. With real estate, you might have maintenance on your hand for a long time. So both of these investments require you to think your way through it. All right, real estate's great for the little guy. Why? Because it's been working for them for decades. It doesn't require a computer program. Anybody can do it. All right, my name is Ted Thomas, and 30 years ago, I discovered this market. I've never looked back. These properties are unwanted properties, and I can buy them for 10, 20, 30 cents on the dollar. That tells me I can make a profit the day I buy. If I buy property for 20 cents on the dollar, I can sell it for 50 or 60 cents on the dollar. If I can do that when the day I look at it, I'm making money right away, and that's what I want. My name is Ted Thomas, and right below me is going to be some free gifts for you. But before I tell you about that, I want to tell you, before you purchase a property, be sure you've had boots on the ground. There's a lot of reasons for that. Things happen to properties, and I don't know what they are. There could be a fire, there could be a hurricane, could be that you haven't looked at and didn't see the chicken farm next door. I don't know what's happened to that property, and neither do you. But once you buy it, you're going to own it. So don't buy anything that you haven't had boots on the ground. That was number one. Number two, big mistake, is people don't have an exit strategy before they buy. So they get in there and they start bidding and bidding and bidding, and yes, they win the auction, but unfortunately they bid too much. So don't bid until you have a bidding strategy, so that you know that you got to be way below the bidding strategy if you're going to make money. My name is Ted Thomas.